Hello everyone, welcome back to my channel. I'm Mia. Buying a car is one of those big decisions that can feel like a total headache. But guess what? In today's crazy car market, especially with all the buzz around electric vehicles, you could actually end up spending way more than you need to if you don't know what you're doing. So today we're diving deep into whether you should buy, lease, or finance a new car. Trust me, by the end of this video, you'll have all the info you need to make the smartest choice. I'll be putting a comparison table at the end of this video, so stay tuned for that. Let's get started. First off, let's talk about the main options you have. When you're looking to get a new car, you can buy it outright, which means you pay the full price up front and the car is all yours. No monthly payments, no interest, just full ownership from day one. Simple, right? But not everyone has that kind of cash lying around, so let's look at the other options. Next, there's financing. Financing means taking out a loan for the car. You could go with zero down, but usually put down a deposit, often 10-20% of the car's value, and borrow the rest from a bank or credit union. You pay back the loan over 3 to 5 years with interest. And at the end, the car is yours. This spreads out the cost, making it more manageable, and you build equity as you pay off the loan. Then there's leasing. Leasing is like renting the car for 2 to 4 years. You make monthly payments based on the car's depreciation, plus fees and taxes. At the end, you return the car to the dealership. You don't own it, but some leases let you buy at the end for a set price. It's great for driving new cars every few years with lower monthly payments than financing. Finally, there's balloon payment. You make smaller monthly payments for a set period. And then there's a big final payment called the balloon payment. To own the car outright. At the end, you can pay this to keep the car. Sell it to cover the payment or refinance, but returning the car without paying is not standard and could lead to default. Now let's dive into the numbers. We'll use a Ford F-150, one of the most common trucks in the US, priced at $39,345 as our example. Buying the Ford F-150 outright means I pay the full $39,345 upfront. That's a lot of money to come up with all at once. And not everyone has that kind of cash just sitting around. After 3 years, if I decide to sell the car, I might get around $23,607, assuming 60% resale value. So the effective cost of owning the car for 3 years would be $15,738. But here's the thing, I've tied up $39,345 in the car, which could have been invested elsewhere. That's a lot of money that could have been working for me in other ways. For financing a Ford F-150, priced at $39,345 with a 6% interest rate over 3 years, the monthly payment would be approximately $1,197, totaling $43,092 over 36 months, if sold after 3 years. I might get around $23,607, making the effective cost about $19,485. This option spreads cost over time and ensures ownership at the end. Leasing the same Ford F-150 might involve a $2,000 down payment and monthly payments of about $550 for 3 years, totaling $21,800. At the end, I return the car with no standard option to buy unless negotiated, ideal for those wanting new cars every few years with lower monthly costs. For a balloon financing option, a $4,000 down payment and monthly payments of around $736 over 3 years would total $30,496. To keep the car, I'd pay an additional $20,000, bringing the total to $50,496 otherwise. I've spent $30,496 if returned, offering flexibility at the term's end. The data above is just for reference. Go with the actual situation on the ground. Alright, so let's talk about the tax stuff when buying a car in the US. First, if I buy a car outright, like paying cash for a Ford F-150 for $39,345, there's sales tax on that, say 7%. So that's $2,754. For personal use, I can just deduct that sales tax directly. But if I itemize my deductions, I can choose to deduct all my state and local sales taxes instead of income taxes up to a $10,000 limit. It's not just the car sales tax, it's everything I bought, and most people use IRS tables to estimate it based on income, so it's a bit of a hassle. If I'm using the car for business, that's different. The whole cost, including sales tax, is a business expense, and I can depreciate it over time. Now, if I finance the car with a loan, say over 3 years paying $43,092 total for this car, that means I'm paying interest. For personal use, that interest isn't deductible at all. But if I use the car for business, I can deduct the interest as a business expense as long as I track how much I use it for business. Like 50% business, 50% personal, then deduct 50% of the interest. Oh, and I have to choose between standard mileage rate or actual expenses. If I pick mileage, I can't deduct the interest. Leasing is simpler for business use. If I lease the Ford F-150 for $550 a month and use it for business, I can deduct those monthly payments as a business expense. And if it's mixed use, I just figure out the business percentage and deduct that part. Lastly, about balloon payment loan, like the UK's PCP, in the US, it's not treated like leasing for taxes. In leasing, you don't own the car, but with this, I have the option to buy it at the end. So for tax purposes, it's usually seen as financing, not leasing. If I use it for business, I can deduct the interest part of my monthly payments, not the whole amount like in a lease. So to sum up, for outright purchase, sales tax can be part of my total sales tax deduction if itemizing, but it's not direct. For financing, interest is only deductible for business use. Leasing, monthly payments are deductible for business use. And for balloon payment loans, it's the interest part that's deductible for business use. Now let's talk about the psychological factors. If I'm someone who likes to keep my cars for a long time, financing or buying outright might be the better option. I own the car outright, and there's no stress of monthly payments. I can drive it as much as I want, and I'm free to modify it, but I'm also on the hook for maintenance costs, which can add up over time. It's a good option if I'm someone who likes the idea of owning something outright and not having to worry about payments. Leasing and balloon payment loan let me drive a newer car with lower monthly payments. I can change cars more frequently without worrying about selling it. It's a good option if I like the idea of driving a new car every few years and don't want the hassle of selling the car. One of the most important factors to consider is the opportunity cost of my money. Buying a car outright for $39,345 means that money is locked up in the car. I can't use it for anything else. Alternatively, I could invest the remaining $39,345. Maybe I could make a significant return over 3 years. This could offset the additional cost of financing. It's a good option if I'm someone who likes to keep my money working for me and doesn't want to tie up a large sum in a car. In the end, the best option for you will depend on your financial situation, your preferences, and your long-term plans. Consider your financial goals, your driving habits, and your preferences. Run the numbers, think about the psychological factors, and don't forget the opportunity cost of your money. If you're still unsure, consider consulting with a financial advisor who can help you make the best decision for your situation. By the way, the stuff in this video is just my personal take, not investment advice. Thanks for watching, guys. If you found this video helpful, please like and subscribe. Let me know in the comments how you bought your current car or what you're considering for your next purchase. I'd love to hear from you. See you in the next video.